Hi, everybody. This is Seth Martin, and welcome to the Middle Class Investor. It is Sunday, May 31st, about 10 o'clock at night, and I just got back a little while ago from the Guadalupe Mountains and Martha, Texas. Went out there with some friends. Here's a picture of us. You can see this is us at the tallest place in Texas. It's 8,700 feet above sea level. So at this very moment, we were the tallest people in Texas. We were higher up than anybody else in Texas. Anyway, it was a lot of fun, and it's very challenging if you're thinking about going and climbing Guadalupe Peak. You better bring your A game. That's all I got to say, because it is pretty tough. So it was a little tougher than I thought it was going to be. Anyway. Last week was a down week in the market. You can see here on our chart, our weekly chart. You can see this bar right here actually closed below this high bar here, but it stayed inside of our dashed line that we've been looking at, that pattern. And so as long as it stays inside that, we're looking for a new high. So I would say, right in this same area, not too much higher than what we've got before. But then that should just about do it for the time being. So let's look for a new high, and then we'll look for the market to probably sell off into this area at least, and maybe even down into this 1800, 1825 area. So we'll be watching that closely and offering some, I don't want to say advice, because it's not really advice. It'd be more like guidance on how to deal with that if you're looking to deal with that. Some of you might not want to be dealing with that. You might just want to hold through that type of pullback, assuming it's just a pullback. But others of you might want to go ahead and take advantage of stepping to the sidelines. So I was talking to a friend today, and maybe it's worthwhile to mention some of the objectives of this YouTube channel and what the Middle Class Investor is all about. Somebody said a long time ago, if you can just avoid the bear markets, you're going to do really, really well in the market. And of course, that's easier said than done. But that's one of the things we're trying to do here. We're trying to avoid the bear markets. There's two primary bear markets that I'm concerned about. The first one is the stock market. There's a lot of quantitative easing. The Fed increased the monetary base by $4.5 trillion, and a good portion of that money flowed into stocks. And so I'm a little concerned about that, and just the length of time the bull market's been going, and so on and so forth. The other, let me switch to it real quick since I'm fixing to talk about it. The other concern is the bond market. We've been talking about that, and we've been talking about the bond market in terms of 10-year Treasury yield. So we were focused on this low, saying that this might be the low, and if this is the low, and this is the first move off the low, and this is the first pullback off the low, this next move could be very significant. And it's likely to catch a lot of people off guard. There's kind of well, first of all, let me say that the Fed doesn't set interest rates. The Fed follows interest rates. Now, they do set the overnight rate. That's the short-term lending rate to banks. But as far as your 10-year Treasury, your 2 years, your 5s, your 20s, your 30s, the Fed does not set those rates. The market sets those rates. Now, it's interesting, we were talking today, does the Fed setting short-term rates cause then the long-term rates to move? And there's quite a bit of data on this, but I don't have it to present to you, but maybe there's an easy way for me to do that. But people that have studied it and studied it closely have found that the Fed follows interest rates. They lead interest rates. So there's a lot of focus on the Fed, around interest rates, and just now a lot of their other actions are pretty destructive, especially this quantitative easing. And that activity does have effect on interest rates because they're going into the market and actually buying United States Treasuries, which causes the yields to go down. So demand for bonds causes the yield to go down. An excess supply of bonds causes the yield to go up. So anyway, I just wanted to kind of mention those few things again, because sometimes week after week I can be doing this program and forget, kind of what the overall objective is. The overall objective is really to keep you out of these big bear markets, because if you can avoid a 50-60% loss in your account, and then catch a big chunk of the next bull move up, you're going to do really well in the markets, and you'll retire just fine. So that's kind of what we want to focus on. Let's go back to the volatility. The volatility was up this week with the market being down, and we talked about how that was likely to happen somewhere in here. It's kind of following this channel that we have here. I don't know. Maybe it's time to take some of this stuff off. It's kind of the blue line here still kind of holding, even though we had some action kind of leaning against it and actually piercing it. We'll look for volatility to pull back again next week as the market is likely to go up and make a new high. But what will be interesting to see is if volatility doesn't make a new low. In other words, it stops, let's say next week it looks something like that. It comes back down, but it doesn't take out this previous low. I think that would be interesting, and probably set us up for an increase in volatility to the upside. Finally take out this channel. So we'll keep an eye on that and have some commentary on that next week or the week after as that develops further. Let's look at the euro. The euro still, it's still in a downtrend, but has got a pretty good bounce here. Bounced off this line that we, oddly enough, we've drawn this line. It's like a 20-year-old. It goes way back here, maybe 10, 15 years old, to a level of support, and it went right down to that level. So I thought that was pretty interesting. But the euro is right in the middle of this bounce, so it's really hard to say at this point whether it's going to go up toward this pivot. Let me zoom in a little bit. Whether it'll go up toward this pivot or if it'll come down to this pivot. I think the odds are, especially now that we got this candle right here, we call this a hammer. So when you have a downtrend and the bears push it all the way down, but the bulls push it all the way back up, as soon as you get a candle that looks like this, in other words, the high is the closes above this high, then you can say that's a hammer, and usually that signals the end of a downtrend. So this is a pretty good place to enter the euro if you want to be long the euro. Your stop would be somewhere just below this low here. If you're trading, if you're trading the euro. Let's look at Germany. Germany's starting to look a little softer all of a sudden. We've been expecting Germany. It stayed above this trend line. We've been expecting Germany to move up into this level of resistance, and I still say the odds are. As long as it's above this trend line, the odds are it's gonna run all the way to this resistance area around 34. So we'll just continue to keep an eye on that. Of course, if it does break this trend line, then we'll probably switch our strategy to. So let's just say, for example, it comes down and it breaks the trend line and does something like that. maybe even goes a little lower. What we'll do is we'll wait for it to come back up and retest. This happens all the time. It'll retest the bottom part of that trend line right here, and then here you could say, okay, I'm just gonna step to the sidelines because Germany looks like it's broken its trend line. Now it could recover, it could chop around and then recover and go back up. But I've said this many times, you don't really know if that's going to happen. So it's good sometimes to just step to the sidelines and let it happen and then respond accordingly. Japan, was in this sideways trading range forever. It broke out. We put this box up here as a target. Looks like it's wanting to make that target happen, although we do have some selling here from last week. I mean, we might not make that target. I still say the odds are that we make it, but it really looks like it's laboring here in the last several weeks, and it's possible it might not make this target. It's chopping around quite a bit here. Certainly, if we can get above these highs right here, then it's going to go ahead and make it. But right now it looks, you can kind of tell it looks kind of sideways right in through here. So I think we just have to watch it and see if you're trading the Japanese yen or the Japanese market, not the yen, but the stocks in the Japanese market. You probably want to continue to hang on to them. Because this still, to me, looks fairly good. Okay, the UK pulled right into our resistance area, this box right here, and has begun to sell off. Now, it's possible that, this looks pretty definite here, but it's possible that the UK next week could actually come up and next week and the week after make a slight new high before it rolls back over. So sometimes you get a sharp pullback here like this in an uptrend, and you think, oh, okay, that's it, and then you get kind of a one last test, and then you get this. So it's really hard to say. You really can't. What you typically do is you go ahead and take your trade here, assuming that it's probably going to come all the way down, but you got to be kind of prepared for this because it could easily, because this doesn't look entirely complete. It could be. This is a pretty long tail on this candle here, so this move up could be complete right here, but you could also see a couple more candles to the upside here. So I don't know. The UK really doesn't matter. I'm kind of splitting hairs here, but the UK looks weak overall, and in fact, it's weaker than Germany, weaker than Japan. So sorry, you guys over in England. You're just your market's a little weaker than some of the other markets in the global finance world. All right, let's go over here and look at the dollar. Well, it's on gold. Let's look at the dollar first. The Dixie, as they say, the DX. So we can see this old high here from 2001, and we sold off hard, and then it's been kind of chopping up and had a good run here in the last several months in the dollar. If you recall, we did draw in this. I'm going to try to shorten this a little bit, bring this down a little bit so that you can see it easier. I know this lays out a little differently than the profit charts on the screen, but you can see here we've had this pullback, and then I've since drawn in this next level of resistance. So remember, we go from pivot to pivot. So there's a pivot. You can kind of see it here. The market comes up and it pivots right here, and then it pulls back. So what we do is these areas of support and resistance come off these pivots. and that's why I draw the box where I draw it. So I don't know if you remember that or not, but we've covered that before. But it doesn't hurt to cover some of these topics again, as some of you are new and some of you or maybe you forgot how we do that. So anyway, the dollar looks strong, and I suspect the dollar is going to move into this 102 area, and then then it'll pull back. So it moves up and it pulls back. It moves up, it pulls back. And I think the trend in the dollar is definitely up at this point. That doesn't mean it's going to stay up. That just means until the evidence supports different information, the trend in the dollar is up. So let's go back to gold. I know there's a lot of people interested in gold for all kinds of different reasons, but you can see the low in gold was way back here in 1999. We've since had a huge bull market, 12-year bull market. Now we're in this pullback area, this pullback zone. And if you recall, we talked about we went in detail over this pullback here, and then I said right here was a good place to enter a trade. I'm not sure how many people were listening at that time, but the reason is because what you're looking for a lot of times is you're looking for a close above the high of the previous candle. So what you can't really tell, I tell you what, let me do it like this. Let me scooch over here, because really this is where the rubber meets the road right here. So focus in on this area right here at the hard right edge. So it's pulling back. You get that pullback, and then this next week, you see how there's a close above this high right here. Well, this is usually a good indication of a good place to enter trade, because what you can do is you can say you're wrong below this low right here. So if the market went to 1140, below 1140, you just say, hey, I'm wrong. But your upside usually is, in this case, is at least to this, let's say 1320 area. So you risk $10 down here to make, I don't know, what is that? $40 up here. So it's 4-to-1 reward to risk. So you can see that played out pretty good. Now I missed that initial entry, okay, and so I entered when I got about a 62% pullback of this move. So we had, let's zoom in on this and let's discuss that. So we had this move right here, okay, up to this point, and I missed it, right? I didn't get in right here, so I missed the move. So what I did is I looked for a 62% pullback of this move. So if you measure this, this low to high, and then you take 62% of it and subtract that, then that's about right in here, okay? And so I went ahead and entered a trade in there, and you can see it kind of started off pretty good and then sold off, and now we're down here. Now during this pullback right in here, as it ran up and I'm kind of broke even, I got out of the trade. So I don't know, I didn't manage this very well, but I still think this is a pretty decent entry. But now the target is right. It's just off this pivot here. The target's in this zone, the short-term target. And when I mean short-term, I'm talking about weeks to months type of time frame, because this is a weekly chart. So it doesn't make any sense to look at a weekly chart and talk about what's going to happen in a few days. If you want to have targets that are days, you should trade a daily chart. So anyway, that's what gold looks like to me. You can look at NinjaTrader and look at we can look at the shorter term. Let's look at a daily. So this is the ES, which is the future for the S&P 500. And you can see it's pretty busy. I need to get in here and clean this up. Boy, what a mess. So it's just been chopping, but kind of meandering its way higher. And I think, to me, what looks like is going to happen is we'll probably take out this high. So we could take a pivot off this high right here on this daily chart. And, you put a gun to my head and say, what's the market going to do? I'm telling you it's going to this little zone right here, this 2137, 2140 area, which incidentally would be new highs in the market. So you can see the decision point off this pivot. You can see the market stopped here. Take a decision point off this pivot and you get this one. You can see the market stopped right there. So these decision points work pretty good. So if we take a pivot off this one, we would expect the market to stop right here at this 2138 area as it bounces in this last, what looks like to me, a last gasp effort to make new high prices. So this week, look for, now it may not complete itself this week, but between this week and next week, we should get, that's not even what I wanted to draw. I wanted to draw just a line. So we should get this week and next week a move up into this DP. And then I think prices are so narrow here that the difference between, this move to here and this move to here, that there's so little movement. I think what you're going to start seeing is you're going to start seeing traders sit on the sidelines. And when they do, the market will probably fall in this manner and probably fall pretty rapidly. Once there's not enough, room for a trade to run, for a trader to make money, a lot of times they'll just kind of sit on their hands. They won't do anything. And then what happens is the market just kind of ends up falling under its own weight. So now oil hit its decision point here. Looks like it wants to turn back down, but I wouldn't be surprised if oil kind of went down a little bit, went back up. Excuse me, I had to yawn. Went down a little bit, went back up, and made even a slight newer high. But right now it's kind of in the middle. I think oil, again, you put a gun to my head and ask me what oil's going to do this week and next week. I say oil's probably going to go a little higher, but who really knows? It's at DP resistance, and as a trader, you wouldn't want to take a long position just because it's at resistance. And this looks like a pretty good resistance. It's off of this pivot right here. So, it's reasonable to have a lot of confidence in this resistance area. But oil, we also do have a little bit of an ABC here. So it could be that it's fixing to bounce and make just a slight new high before it makes lower prices. What else we got? The ZBs bonds. A few weeks ago we got a signal on the ZBs to go long, and you can see that that trade is on. I mean, I didn't enter the trade, but you can see that had we entered the trade, it would have taken us in here right at 155.28. The target's up here at 168.17 or so. So look for bonds to move up a little bit here. Maybe, right? And of course, if bonds move up here, then yields are going to go down. So let's go back and look at the yields on the CBOE interest rate. So you could see yields go down over the next couple of weeks. And so where would they go? Well, they would go to just below this area right here. So it would kind of meander its way down into whatever this price level is right here, actually just below it. So, look, if we do get some sort of pullback here, it could be brief, it could be just about over, and now we're looking at something like this and like this. But it really is kind of in a no man's land, so I don't think there's anything to do until it breaks this trend line, this descending trend line. I don't know. We still don't know if interest rates, going to the upside is going to scare the stock market, and then the stock market's going to sell off, or is it the other way around? Something's going to end in the stock market, and it's going to create some result in the bond market. We still don't really know. There's no way to really know how that's going to play out. So we're just kind of in wait and see mode. So I need to get out of that. Okay. We're just in wait and see mode right now. So sometimes making money in the markets is more about being patient than being active. So we look at DAX. The key thing here on the DAX is we had this advance up, okay? It pulled back to this DP support area, and it did just fine, okay? And then it's made a move up. Now the question is it through pulling back? Well, you don't know, okay? But what we do know, what we can say about this is this is the previous low right here. So what we can be on the guard for is, let's say it pulls back. Well, I can't draw when I'm trying to draw. It's maddening. What was I gonna do? Let me nuke that real quick. Okay, so let's say that so here's our previous low back over here, right? So let's say this pulls back. So let's say it's not too pulling back, but it pulls back finally to right here. Okay, and then, but it's at this low is higher than this low here. So, and let's say the following week you get something that looks like I messed it up again. Well, let's just say it pulls back to a higher low and starts to take out. Well, then likely what's going to happen is bonds are going to make a new high, yields are going to make a new low. Or it could just kind of peter out right in this area here, which may not create a new low in yields. We'll just have to see. There's all these markets that are very precarious situations right now. I mean, they're right on the edge. You literally can go short or you can go long. All right, they're just in the middle of nowhere, kind of, so to speak. So again, I say this all the time: be really careful, and just remember that we're trying to just avoid the big bear market, right? So the problem is we don't know if it's going to be a 15% pullback or if it's going to be a big bear market. And so we just have to kind of look at what we see and then act on what we see, and let's not act on what we think. Crude oil. Crude oil looks like it did, or like we've been talking about, and I think the next move in crude oil is going to be on a monthly chart, and we could see $75, $80 a barrel, which would be a pretty good bounce. There's just too much crude oil in the world right now, so that's what's causing the price to appear a little soft. Well, everybody, that's almost 30 minutes tonight, and I think that's a good overview of what's going on in the markets right now. just remember there's not much upside left in this market, but there's a whole bunch of downside. And if you could just try to remember that and then act appropriately, I think you'll be fine. But don't try to talk yourself into staying in or holding something longer than you really want to hold it. Just cut your losses short and move on to the next thing. That's the best way to do it. So, share the website or share the YouTube channel with friends and family. You can go to Twitter and follow me on at Investor Class. So it's Middle Class Investor, but the after the at sign, it's at, so that at sign Investor Class. So well, that's about it this week, y'all, and I hope everybody had a good week. I know I had a kind of a half business week, and half work week, and it was pretty tiring. Even the time off wasn't relaxing when we were hiking up that big old mountain. I had no idea Texas even had a mountain that was 8,700 feet above sea level. So it was quite an experience. Had a great time, and be looking to go do some stuff with these guys some other time as well. So, all right, everybody. Well, that's it for this week's Middle Class Investor. Be sure to join in more often now, mainly because you're just going the action is fixing to pick up in the market, and to the extent you want to make a decision, I want to make sure I can help you make an intelligent decision about what to do in these markets. You can see some increased volatility, some just difficulty in the market, just trying to make a decision. And at the end of the day, that's what we're here for. We're trying to help people make decisions about what it is they're investing in, and how to miss the big bear markets, things like that. So, all right, everybody, thanks a lot for coming in. Really enjoyed it. Really appreciate your comments, those of you that are commenting. And certainly, if there's something you want to see or talk about here, just let me know on the comments section, and I will take care of that. Okay? Thanks a lot, everybody. We'll see you next week. Goodbye.